The moment you've been waiting for. In fact, the entire market has been waiting for Nvidia earnings. I'm gonna break them down. More importantly, I'm gonna give you the bull case and the bear case. We'll look at a chart. I'll tell you where I think the stock is headed next. Here's the headline. Nvidia nearly doubles revenue on strong AI demand. Revenue of $35.08 billion versus $33.16 billion expected. Now, this is by LSEG. It's important. I'm going to explain what I mean here in a second. Earnings per share, 81 cents adjusted versus 75 cents adjusted again. That's the expectation from LSEG. So this is a beat on top and bottom lines. Expectations, $37.5 billion plus or minus 2% in current quarter sales versus $37.08 billion expected. Fourth quarter forecast implies year-to-year growth of about 70% from a year earlier. That's a slowdown from 265% annual growth in the same period a year prior. Now, we've talked about this many times. There's going to be a cycle with Nvidia, and at a certain point, the comps, they're just not realistic. They're not sustainable. You can't keep having 265% annual growth. It's not possible. Now, Wall Street is always going to want to see a stock up the ante. In other words, every quarter it wants to beat and just keep beating and grow, 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 grow. Think back to the pandemic. When you think about the companies that benefited, there was some pull through there, right? The comps were very difficult and the stock struggled for a while. Nvidia at some point is going to have that cycle. I don't think we're quite there yet. Okay, so earnings look pretty good, yet the stock sold off initially down to about $140 a share. And you can see it's popped since then. It's trading at about $145 a share right now. The initial reaction from this, I told the gang in Discord, hey, this is a little bit of digestion. There's traders. There's also one other thing that a member pointed out, and that is the earnings whisper number, which is 39 to 40 billion, depending on where you look. If you don't beat that earnings whisper number, we might see a sell-off. Well, that's exactly what happened. It's also because of that slowdown in growth that I just discussed. So yes, the numbers are very strong, but you have a slowdown, and there's going to be a slowdown to that cycle at some point. And expectations were sky high. To think that a company could beat by $2 billion and yet still sell off because the street expected even more, it's pretty crazy if you think about it. So you're going to see these strong numbers, 94% on an annual basis, still a consecutive slowdown from previous quarters. 122%, 262, and 265% respectively. Again, it's not sustainable. It's not going to last forever, especially when you're at a $3.6 trillion market cap. Apple is $3.46 trillion. This is the largest market cap in the world. Microsoft is sitting here at $3 trillion. This is an example. I think this is a great chart. It shows you the data center revenue growth for Nvidia. Now, this goes back to 2023, and look at this growth. I always like to look at these numbers as well. So this is going to be on Seeking Alpha. You've got this EPS beat 6 cents, revenue $35.08 billion. That's 93.6% year over year. It beat by almost $2 billion. Again, that street whisper though, $39 to $40 billion. Expectations were sky high. Record quarterly data center revenue. This is $30.8 billion. I just showed you that chart. The growth is just massive. And yes, it's up 17% from Q2 and 112% a year ago. At some point, it's not going to continue to grow at 200-300%. Jensen Huang, the CEO, said the age of AI in full steam, propelling a global shift to Nvidia computing. Demand for Hopper and anticipation for Blackwell in full production are incredible. AI is transforming every industry, company, and country. Q4 outlook expected to be $37.5 billion, consensus $37.04 billion plus or minus 2%. Now the margins are a little bit lower here, and that's because of that ramp up. So you should see margins accelerate again in the next couple quarters. So the earnings call is underway. CFO expects they will exceed previous Blackwell estimate of several $billion in the January quarter. So on this earnings call, it's going to be really important to listen to what Jensen says. For example, Blackwell. Is that demand going to last for several quarters? Is it going to slow down? That's going to impact where the stock goes and that entire cycle that we've talked about for a long time. And I said earlier, it depends on the data that you look at. This is saying the street whisper 38.5. So you're seeing 38.5, 39. I've seen $40 billion. Of course, the number was lower than that street whisper. Let's talk about the bull case as well as the bear case for Nvidia. So if you follow Jensen Huang, the CEO of Nvidia, he talks about the 4 waves of growth for AI. Wave 1 is the initial training and infrastructure build out. Now, Fired Up Wealth also talks about the different phases of AI and which stocks benefit. Of course, Nvidia is going to be part of that infrastructure phase. But Jensen's talking about just for Nvidia, there's wave 1. Wave 2 is widespread adoption. Wave 3 is AI usage in heavy industries, so manufacturing, manufacturing, energy, etc. And wave 4 is going to be sovereign AI, where every government relies on AI. Most people will tell you that we're in wave 1, maybe the very early stages of wave 2 at the earliest. So if you're a bull on this, you're looking at this and saying, hey, we have 3 more waves of growth, and this party's just getting started for Nvidia. Now let's look at the bear case. Let's look at the other side of that argument. 4 companies, 4 of the mega caps, the hyperscalers. Really, Nvidia is relying primarily that CapEx spend on 4 major companies right now. And what happens if you lose one of those companies? What happens if the CapEx slows down? But I think even bigger to that is competition and what that looks like as well. Microsoft's Azure chips promise AI leap, taking on Nvidia and AMD and cloud tech race. You also see headlines like Amazon set to introduce new AI chips in December to rival Jensen Huang's AI stalwart. So Amazon is introducing new artificial intelligence chips in December. That can certainly impact the stock. A headline like this could come out and Nvidia stock could sell off hard, like 10-15% in a single day, especially considering the stock is up 189% in the past year. And in the past 5 years, Nvidia is up 2,668%. Oh, and don't forget, Mr. Trump, the last time he was president, we had a lot of trade wars. You're going to see tariffs. There was a question on the earnings call about tariffs, and Jensen would not weigh in on how he thinks it'll play out. This is a risk, not only for Nvidia, but for semiconductor companies in general, especially those equipment players, which is why those have underperformed. Now, if you've been following this channel, we said in 2022 that Nvidia was a must-own stock for any portfolio and any risk tolerance. So we were saying pound the table buy, $125 or less long-term, even $150, we like that price. And you're talking about before the split. So $150, that's $15 a share. So $12.50 or $15 a share, now trading at $145 a share. There was an intraday high where this got to $149, and I think it's 76 cents, 149.76. I told you the beginning of this year, in fact, late last year, I was saying this stock is going to that 150 level sometime in 2024 or early 2025. Now I can see after hours, it's down 1.36%. So it has recovered nicely from the earnings call. And I did say earlier when the stock sold off, I said, give it some time. It's just digestion, some pin action. Let's wait for the earnings call and see what happens. So the stock ripped from $10.81 a share all the way to 140. Serious profits made right here. Dropped from 140 down to $90. This is just back in August, and then ripped to new all-time highs, 144 just late last month in October. Now again, the intraday high was almost $150. Right now you've got $143.97 post-market. The 50-day moving average is about 133. The 100-day moving average is somewhere closer to 125, and that 200-day, this is their simple moving averages, $110 a share. Looking at Fibonacci pivot points, you're looking at 101 to 160 on the upside. I've been saying this for a long time. I still believe this stock will go over 150, if not this year, early next year. I'm going to put up what I own on the screen here so you can see exactly what my cost basis is, $3.93. I've trimmed this along the way. These are house shares. This is all profit. I originally said I was going to sell some 150, 155. I had a limited order in. I canceled that. I'm probably going to look for somewhere between 160 and 165. No guarantee it gets there, but I think I would trim out of my 2,500 shares, probably around 500 shares. I do think it's possible. This stock could easily break down. It could go back to $100 a share. But if Blackwell demand continues and we have that strong demand for the next several quarters, you could see the stock extend that 160 to 175, even $200. Now, like I always say, this is not a reason to go buy the stock. But when you look at analyst price targets on Wall Street, 39 buys, 3 holds, 0 sell, 42 ratings. 165 is going to be the 12-month forecast. That's kind of the consensus, the average. Lowest is 90, highest is $200. And I do think that $200 is possible on that extreme bull case. So selling some shares at 160 to 165, it's actually coincidental that the average street price target is $165. Now that might not happen anytime soon. It could take months. And there's a risk that the next quarter something happens and the stock could drop as well. But you do have to understand that this is going to have a cycle. And when that cycle ends, it's not going to end well for the stock. It's going to go to some extreme high, all-time high number. It's going to crash down, 20, 30% lower. It's going to find kind of a new floor and it'll trade in a range, and it could trade in a range for a very long time. You're talking about going on $4 trillion market cap. There is a lot of risk associated with buying the stock, especially at $145 a share. Do I think it'll go higher? Yes. What does that cycle look like? When does the cycle end? It could keep going. And that $200 price target, it could be much more than that if things happen the way Jensen Huang sees it playing out. But as an investor, there's certainly risk buying the stock at 145, even though I'm telling you could see 160, 165, 175, and $200. But I do think this will consolidate and it will go higher with time. If you're new here, make sure you subscribe. Click that bell for notifications so you don't miss a future video. And if this video was helpful, drop me a like, drop me a comment. Have a great rest of your day. Take care.